welcome to today's webinar, Market Matters, episode 4. Thank you for taking the time out to be here today. We really do appreciate it. We're going to be running our exceedingly popular question and answer feature today. So if you have any questions for SBDC or for our presenter, Adrian Hovey, then you can type those in the question box. And if you miss anything during this recording, don't worry. We will be broadcasting the video on YouTube a little bit later. As always, we'll send out that email link to you so that you can watch the program later. My name is John Hovey. I am the Special Projects Consultant here at North Metro. I have with me today Adrian Hovey. He's a lead consultant here at North Metro SBDC. He's also a financial advisor with Edward Jones. He knows his way in, out, and around small business, business planning, business development, and he's also a Ivy League MBA. Very smart guy, and wow, sometimes people even think he's an economist. I am super happy to be here today. We're going to educate the entrepreneurs in the North Metro area about finance and about the financial market, how the movements in the market are affecting you. I know Adrian's excited too. And I want to make sure that you stick around until the end of the presentation today. We're going to be revealing Adrian's new gold coin collector's guide that I've created for him this week. It is the only way that you can protect your wealth moving forward past COVID. Gold coins are where it's at, 100%. I got one. It's got a kangaroo on it, man. It's really hot. So I'm going to turn over to Adrian right now. And as always, we're going to be looking at the same 3 questions. Number 1, what's been happening in the market this week? Number 2, what does it mean to you, the small business owner? And number 3, we're going to talk about that gold coin wealth protection plan. I cannot wait for that gold. What do you have for us this week, Adrian?
As excited to be here as you are, John. Always a pleasure. Thanks for having me back.
You bet.
I wish I could say it's been a fascinating week in the markets. It really hasn't, which is kind of, maybe contrary to what we normally see. But, in summary, here's what we've seen, right? Stocks have continued to go up and down. That's volatility. We've been talking about that for 4 weeks. Maybe specifically last week's drop was a little bit more reactive to the uptick in cases in places like Arizona and Florida and a little bit in Texas, but that is maybe not unexpected. And I guess the main takeaway is that there's this like headwind we all have to go through regarding COVID, and any recovery is going to be very dependent on that. And it's just something that's been around for a while now.
Sure.
I hate to say it's becoming commonplace, but it kind of is. So let me jump into the slides here. Can you guys see my slides?
Not yet.
Hang on. So
there we go.
There we are. So what it kind of comes down to is, over here we're watching 3 trends basically, and we'll talk about each one, and understanding how that relates to the volatility that you're seeing, and in all honesty, what can you do about it, right? So the first trend that we're seeing is that really the path of COVID is going to shape the economy and the recovery as a whole. So here you can see this uptick in Florida and Texas cases. So the cases go up, and we see this reactionary thing happen in the market. So
Sure.
That is just, it's a cause and effect type of deal. And as a result, you see, I think Texas sort of dialed back some of their opening plans, maybe not letting so many people go to bars and restaurants and things. I want to say it was New Jersey and maybe New York have this self-quarantine, in place if you come across state lines from another state. So there's things like that are happening. And of course, like I said before, it's kind of a headwind. We still have to overcome those individual states' activities that are going to slow down the economy as a whole. So on the flip side, let's look at what the economy, what's driven this equity rally to date, right? Like I get asked almost daily, how can we be in the midst of the worst pandemic and incredible unemployment? How does that translate into growth in the market or into really any positive impact in the market? And some of those things, you got to remember the key role of the Fed and other banks in this recovery, right? We've seen it, that strong reaction from the Federal Reserve. They've slashed these rates. Inflation is low, and short-term rates are pretty much near zero right now. So that is keeping the credit lines open. The Fed has pledged to offer credit to businesses. They're buying T-bonds, mortgage securities, corporate bonds, even for the first time ever, and really just keeping money flowing towards businesses. And that's a source of optimism. I think that, depending on how you feel about a cure, that's a source of optimism for some people. And I think the speed of the pickup has also been something that's mentally helping people get through it. Does that make sense?
Yeah, it sure does. I think, um, the speed of the recovery is also what's driving some of the uptick numbers. So there is still, as we've mentioned for the last few weeks, this volatility that we all have to brace for.
Yep.
It's hot and cold, but yeah, this makes sense.
Yep. And as business owners, you have to ride that wave a little bit, right? For those of you who own, say, a bar or a restaurant, that's something you're living through, daily, right? That people, you're seeing people come back to your establishment. You drive around the highways and more people are out, and so people are optimistic. I think people want to get back to normal. It's just kind of, we're all navigating the rules, and we're all trying to make sure that we stay safe and balance that against the need for economic recovery. So the third trend that is kind of a little important this week is that the full earnings recovery is likely to take longer than the market anticipates, right? I mean, we just talked about where the optimism is coming from, but this chart, I just want to kind of direct your attention to a couple things. The green bar at the bottom is talking about the average length of a market decline and how many days it takes to recover from that. So the past, I don't know, let's say 20 or 30 years of ups and downs, the average market decline is 131 days, right? So the time it takes to recover the losses from that on average is 178 days. So I think what are we, I don't know, 60 days in, maybe 70 days in. So to date, we've rebounded about 33% from the low in March, and we're only 11% off the high from February, but it's just going to take time. And I think, from a rational planning standpoint, distance yourself a little bit from the volatility and understand that this type of thing is likely to take longer than anybody wants, but certainly maybe than the market anticipates right now.
It is a marathon. It is not a sprint.
It is definitely not a sprint. I mean, the fact that the market decline, on paper was only 23 days is kind of, indicative of being very unusual in terms of that. And so maybe that's not necessarily the final number. So anyway,
those final two columns are pretty buoying though, where after 1 year and 2 years, significant recovery. And
yep.
So if you do have your eyes on the prize long term, then, if history repeats itself, there is cause for optimism. That's nice.
Yep. And I think, as a business planner, that's something to be looking at, right? Like there's going to be a recovery. And in 1 year, I know a year is a long time, but we are looking at, historically, you can be in a much better position in a year. So as you lay out your plan, as you understand, what's relevant to your business, that's something to look at and something to kind of keep in mind that it is not something, especially from an investment standpoint, you don't really look at many things on a 1 or 2 year time horizon even, right? We're typically looking off into the distance, 5, 10, 15, 20 years horizon. So that's what really, that's what really drives a sound plan, is understanding that longer term horizon. So anyway, I mentioned this because, one of the things everybody wants to know, what can I do? What can I do right now? What are the best actions to take? And I think in your business, you're focusing on quality initiatives in your business, right? Not, obviously we're all, we're all focusing on how do we, keep the lights on, keep the doors on, but we also want to focus on quality activities, right? That activities that are going to make a difference and that are going to be investments that pan out in the long term. And one of the things you can do as an individual investor is consider rebalancing your portfolio, because you can reduce risk that way. And it's not a guarantee against profits or losses, but it helps mitigate some of that risk. And if you see the difference between no balancing and rebalancing, you can, remove a whole percentage point of risk. And that's important because risk is, it's tied to how you feel about things. And a lot of people make, irrational decisions or decisions based on emotions right now. and you want to reduce the impact of those emotional decisions on your business and hopefully focus on things that are, planning and results based, or things your customers are telling you, or things you can really kind of put down on paper and say, hey, this makes sense or it doesn't make sense.
Well, that's one heck of a tee up for your gold coin investment rebalancing that we're going to talk about here in a little bit. But before we get to that, could I read you a headline from this week's financial headlines?
You may.
All right. See what you think about this. So, I'm an avid reader and I'm trying to learn more. And what I saw came out towards the beginning of this week was the Bureau of Labor Statistics released their unemployment situation report. And this is what they said. The total non-farm payroll unemployment rose by 4.8 million in June, and the unemployment rate declined to 11.1%. These improvements in the labor market reflected the continued resumption of economic activity that had been curtailed in March and April due to COVID. In June, employment in leisure and hospitality rose sharply. Notable job gains also occurred in retail, education and health services, other services, manufacturing, and professional and business services. Yep. So what can we take away from this? Unemployment seems to be 11.1% is not great, but that is better.
Oh no, it's a lot better. And if you remember a couple of weeks ago, we talked about the importance of job growth and job stability in terms of consumer spending. So that would be the first thing to keep in mind, right? More people coming back to work could mean a couple of things. It could mean their unemployment benefits are over, or as an individual, they now know they can make more money back in the job market. So more disposable income, and also it could mean businesses are starting to have payroll money right now, and things are returning back to pre-COVID levels. All of those things are great, and I think as business owners, now is the time where you need to look back at how things were in February, or even what they were year over year, and start to remember what actually operating your business looks like in a normal time, and think about that, right? What employees do you need to hire back? What can you expect? What is your holiday season going to look like? If you're a cyclical business, like a lot of retail businesses are, summer is typically a down time for you anyway. So, what does that mean in terms of inventories? What sort of long-term and really like short to medium-term planning do you need to do to get through the rest of the year? And then if you have opportunities to hire employees, take a dip a toe in the job market, see what's going on out there. See who's looking for work, and you might have a great opportunity to snap up some good talent. So I think all that, any sort of decrease in unemployment is great. And there's so many things wrapped up into that, but being strategic about it right now, maybe shift focus as a business owner, find an opportunity as opposed to looking at it as a negative.
Very good advice. Very good advice. Well, before we move on to our final segment, we do have a question from our audience. I do like to check in with the readers who are kind enough to write into us here. And this question comes to you from Wilson. Wilson asks, Dear Adrian, such manners. Dear Adrian, should I quit my job to start a business? That's the whole question.
I don't know, Wilson. There's not a lot going on in that question, but there's also a ton going on in that question. So for your own personal situation, I can't answer it. But what I can say is that over the past month, I've spoken with a number of people through the SBDC who are doing just that, right? They think now is a good opportunity to start a business. And, regardless of whether or not it's an opportunity, I think you need a framework to evaluate the opportunity, right? Like if you were going to go to the store and buy a t-shirt, your framework of buying a t-shirt would be the colors you like, the size that you are, and, the price of this thing, right? So you have a framework. You go into the store and you apply your own personal framework. That's the t-shirt I'm going to buy. The same kind of applies for investing, and the same applies for starting a business, right? Like what is the framework that you would make this decision? Like what information do you need? And fortunately for you, there's a wonderful tool out there called a business plan that helps you do that. So Wilson, I would encourage you to write a business plan if you're interested in starting a business, and then, sit down with one of us over at the SBDC, walk through that process, discuss that exercise with folks who've done it, and then use that information to help you make that decision. Because it's not something to undertake lightly. And the more planning that you have, and the more robust your research and plan, the better framework you'll have for evaluating that opportunity.
That's very well said. Very well said. Yeah, every individual has a different case, and certainly many people have quit their jobs and started businesses and are happier for it. Many people have regretted that choice because they did it without a good framework and without some guidance and wisdom. So, yeah, take that all into account, and come see us at the SBDC regardless, and do that before you make that decision, because we can help you. Awesome. Well, now what we've all been waiting for, I got a little antsy on my horn here, but time for our final segment, Adrian's new guide that I put together, the Gold Coin Collecting Wealth Protection Plan. Adrian, I have been doing a lot of reading, and I found a lot of charts where they had like stocks down here and then gold was way up here. Every time gold is like a mountain, and everything else is below the mountain. And that's all a guy like me needs to see is I want to be up there. So gold coins are where it's at, and I bought one. It's got a kangaroo on it. It's awesome. And I know you're going to agree with me that everybody needs to shift the majority of their assets into these gold coins.
Where's your gold coin at? Let me see it.
Well, it's on the internet. I bought it on the internet.
Right. So
it's mine, but it's being held in I think it's in Australia in a safe. It's being held for me though, and I own it. Yeah. I have a digital certificate.
So that tangible asset that you so desperately had to have, you don't actually have it. Yeah. I love talking about gold with people. It's one of those things because there's no reason or reason to or not to buy it. It's completely irrational. It's just something people like. They like gold or they don't. It's like diamonds. People like diamonds or they don't. And if you feel like gold is a thing for you, if you want to have it because it's shiny and cool, go get some gold. If you want to have it as an investment, good luck. I mean, it's not. I'm not qualified to say whether it's good or bad, but it's definitely not something that you can assess value in any way other than how you and other people feel about it, right? Like it's rare. It's there is a scarcity thing going on there. But in the same way, you can look at your own business and say, my business has value because I do this for customers. What is the gold doing? Like, what's going on? I mean, it goes in componentry, and there's a commodity market for gold, sure. But you're not buying a commodity. You're buying it because you think it's a good investment, right?
Got a kangaroo on it.
Yeah, it's got a kangaroo on it, and it looks shiny and fun. So I like things that you can evaluate and wrap your head around. And if you're in that commodity market and you understand it well, gold may be a good opportunity for you to invest. And there are many different ways to do that. But I think you need to understand what it is you're actually buying and what it's supposed to do, right? Like if somebody tried to sell you a machine for your manufacturing shop, and it's not, it's going to do one obscure job that you might do 2 or 3 times a year, versus another machine that might be a little less cool. It might be a little less attractive, but you'll use it every day. I mean, those are things you could evaluate and understand, right? If you want to look at the balance sheet of a publicly traded company, you can do that. And those types of investments, high quality, long-term investments, long-term planning, that's the way you build a solid portfolio. That's the way you can plan and kind of count on things and as much as any of us can. Gold, pretty shiny. Good luck getting to Australia and getting your coin, my man. Not feeling it. Not feeling this as a wealth building strategy.
Well, I appreciate the straightforward answer. And to our audience, I will happily entertain any offers on a gold coin currently being held in Australia. It has a kangaroo on it.
Slightly below value.
It's going to jump for you in value. Folks, this is all the time we have this week for Market Matters. Thank you for tuning in as always. Couple plugs, if you want to get in on the free consulting with Adrian or any of our business consultants, we have consultants in the expert fields of legal. We have accounting, startups, small manufacturing, on and on. Then do visit our website, northmetrosbdc.com, smallbusinessdevelopmentcenter.com. And wow, you can make a free appointment any day of the week with one of our consultants. You can book an appointment with Adrian and talk about market matters all day. And we're happy to help you out. So do check us out and tune in next week for yet another edition of Market Matters. Final words, Adrian.
No, you said it well. Good plug for the SBDC. People are interested. People are excited. We all like to talk about getting people starting up businesses. So, use the resource. If you have a dream, or if you even have thought about it, now is a great time to at least have a discussion.